Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing well. Hope everybody is having a great summer. Missed you guys. Took the last couple of days off just to kind of decompress, not from trading, from recording the video. At this stage of my life, I'd like to get as much R&R as possible. And for the rest of the month, I'll be sporadically just taking off from the nightly video. If you're interested in my thoughts on a day-to-day basis, again, all it takes is 30 days. If you're interested in pivots, come to the webinar. You'll like it, right? You like it. Trust me, you'll like it. Anyway, let's talk about the market, right? Let's talk about the tape. Let's talk about the wonderful world of trading. Again, we're talking about from the wonderful world of trading, not investing. So if you're an investor, we're cool and all, but it's probably not for you. So let's talk about the trading aspect. So Friday, we had a 2% down move in NASDAQ 100. Jobs number came in pretty crappy. And from the old days of Trump's reality show, he physically fired the head of the Bureau of Labor. You fired. Right? Always wanted to do that. You fired. Anyway. So that was bad, right? So the market, came in 2%, and that was the headline. The headline was poor jobs number, a blitz worth of tariffs that kicked in on August the 1st, and this led the market down. Okay, cool. That's from the headline side. Let's talk about it from the trading aspect. Okay, anybody who's been trading for more than 5 minutes for the last couple of weeks have noticed one very specific thing that was happening. Okay, there was one or two stocks, and if you're watching the videos for the last couple of weeks, you kind of see this. There was one or two stocks always going crazy, whether it was a HIMS, right? HIMS or NEGG or one of these crazy stocks. Like something always went nuts for the last couple of weeks. And I've been participating on the upside. It's been absolutely great. And this was that, and this is the third. But we noticed something the last couple of weeks, right? Everything else was weak. Everything else was heavy. You can literally go back to like 10, 12 videos in a row. We've been talking about literally the same thing. And you kind of talked about it all the time. When you see the craps, right? When you see the septic tank dumper divers going crazy once or twice a year, and the rest of the leaders are kind of like drifting to the finish line, it's inevitable. It's inevitable. We've been talking about this in the webinar literally for a week and a half. Guys, every single video, guys, leave the stocks off the top alone. Leave the stocks off the top alone. Really, every video I've been talking about. Don't jump off the 12th floor because, again, they're going to get pulled, not because some climactic news is going to come out, because that's the recipe. That's the way the market's been going for years and years and years. Buyers get tired. Speculation money starts drying up, and the 10, 12, 15 stocks that went crazy, every single day are now regulated to one or two, and eventually the music stopped. And what happened on Friday, it wasn't horrible, right? It wasn't horrible for investors, but if you look at the tally, it looked a lot worse. The Dow lost 1%, not a big deal. The S&P lost a little bit, less than 2%, not a big deal. The Qs lost about 2%, not that a big deal yet. And that's the point. Yet, folks, when you have a potential buyer strike, and now we've seen this potential buyer strike didn't start on Friday, it started a week and a half ago, right? A lot of names just got tired. They just stopped rallying. Sure, the AMVs of the world, they were going nuts. NVIDIAs of the world, they were going nuts. But stocks that had an opportunity to really, really break out did not. And we'll get to some charts in a second. But the most important part kind of going into next week, and now investors are sitting there and hoping that the market bounces back, because surely the market will bounce back, because surely the market has been bouncing back off every bad news since April. And again, remember, we've been on this rock star ride from April, guys. That's the whole point. From April 7th's bottom, we went on the Qs from 402 and we went all the way up to 575. That's a hell of a move, man. That's a hell of a linear type of move. And now the question is, well, what happens next? And this is where we talk about clues, right? We talk about clues. So Let's go back to the start of earnings season. Again, this is kind of when we've been watching the video over and over and over again, you kind of know. If you looked at the initial scoreboard, what happened on earnings, right? You had Intel get destroyed on earnings. You had IBM get destroyed on earnings. You had Netflix, despite a good quarter, got destroyed on earnings. You had Tesla, despite a crappy quarter, started rallying, but failed, right? Failed at the 50-day moving average, which became a great short. We'll get to that in a second. In the last 2 days, they failed miserably. Amazon could not rally into earnings, okay? But the biggest clue was on Wednesday night. What happened Wednesday night? Again, I didn't record a video Wednesday night. I didn't record a video Thursday night. I was just chilling, son. So what happened, right? Meta came out with earnings, really good earnings, right? Really, really good earnings. At one point, they were up like $85. Doing great, right? Doing great. Microsoft came out with earnings, really, really good quarter. They were ripping, also up like 50 points, going nuts. Everything's nuts. The NASDAQ was up 350 points pre-market. You're like, oh, see, this market will never go down again. And what happened that day, and that was obviously the biggest clues rolling into Friday. The Friday sell-off didn't start on Friday. The Friday sell-off started selling off the Meta and the Microsoft gap. When NASDAQ went from up 350 points to down 90 points on the close, it's like a 450-point reversal, 500-point reversal, and that led the stage to Apple's earnings, right? Apple's earnings. Apple's earnings and Amazon's earnings. And you say to yourself, this is what I was just saying, literally, to anybody, anybody who would listen to them, like, who the hell would buy the gap of, even if Apple's and Amazon's news would be good, who the hell would buy a gap up after a 500-point reversal on Meta and Microsoft? And well, that didn't happen. And that's the whole point. Apple came out with earnings, actually did pretty well for iPhone, right? iPhone sales. They actually did okay. The stock was up like 5-6 points pre-market, and they gave it all back. Okay. Amazon came out with earnings. Their cloud arm did not do well, gave a cloudy outlook, down really, really aggressively. Coinbase, that was a monster all summer, an absolute monster all summer, came out, and their trading revenue was light, really, really light. I mean, really, really light. And the stock went down 17%. And the moral of the story is very simple. We talk about all the time, guys, data, data, data. Your eyes don't lie, right? Men lie, women lie, your eyes don't lie. So if you're an active trader and you've been seeing the market go sideways, technically sideways, and there's only 1 or 2 stocks rallying and everything else is heavy, it's imminent, right? It's imminent. We just don't know when, but it's imminent. And we talked about this all the time. Guys, it's much better to be a day early, okay, than a day late. And yada, 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 here we are. So now the damage is done. Whether you listened to what the market was telling you, not to me, I mean, I'm an idiot. But if you listened to what the market was telling you, you could see it with your eyes for a couple of weeks, and you started seeing stocks getting weaker and weaker. And if you look at the price action, even though it was a 2% only move, and it gets only, consider how big we rallied, we really saw some really bad reaction to this move. So let's talk about some names. I mean, really bad. You had Coinbase down 17%. You had CRCL. If you've been watching the videos, we've been talking about this breakdown for, it felt like 5 years. It's only been 2 weeks. Well, you talk about this breakdown. CRCL way below now the linear regression line. That's what's been holding up the stock for a long time. CRWV has been getting absolutely manhandled again. Below the 50-day, bearish, right? Lost the 50-day, get absolutely smoked. Snow, right? Snow in the cloud computing space, down 9%. That's a pretty big deal. Amazon earnings down 8%. That's a pretty big deal. And you can go on and on and on and on. Tesla, so this is why I love Tesla, right? For all you guys in the webinar, what a godsend, man. Again, I've always said this, the top 5 stocks of all time, literally of all time. Tesla, 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 and Tesla. So we had a great run up prior to earnings on Tesla when it reclaimed the 50-day moving average, and then it lost the 50-day moving average, and then it started rallying back to the 50-day moving average, and then it got rejected. So on Thursday, we rejected it as soon as it put in a lower high. I rejected off the 317 area, put in a lower high. It got absolutely smashed. I mean, absolutely smashed. Stock went as lowest at 306 on Thursday. Rallied a little bit. We took it overnight. Stock went down to like 301, 302 pre-market. Gave an opening range, traded all the way down to 297, 298. My lowest cover is in the 299s. And the moral of the story is you see certain things play out over your career, right? Over and over and over again. And it doesn't take many years to figure out if you get punched in the face over and over again, eventually you duck. And when a stock is demonstrating, again, it could be Tesla, it could be anything, but when a stock is demonstrating every ambitious to go higher, but it can't, right? Every want the need to make things good, but it can't. It's usually a signal something is wrong, right? And it's not just Tesla. It could be any stock in the world. But the problem is most traders, they live in denial, right? And despite all the call buying coming in, the 330 weeklies, the 340s, the 350s, the guy came in for, the January, 600 calls, right? It's wishful thinking. It's like you go to play Powerball. Oh, please God, let me hit Powerball, right? That's exactly what's been happening is, and now that the damage is done on so many names and the NASDAQ is down, down pretty aggressively, well, what happens next? Well, let's talk about what happens next, right? So here we are, right? Here we are. So there's no point to panic just yet, okay? And I think a lot of investors, not traders, but I think a lot of investors are just like, it's not a big deal. We're going to rally back next week. And we might, right? Who the hell knows? We absolutely might. But let's talk about it from now, the trading aspect. So you see this rising 34 EMA, right? This is a red line. So the NASDAQ stopped, at least the QQQ stopped right on this 34 EMA. This 34 EMA is roughly 551, 552. Any close below, right? Any close below this rising EMA, there's a potential we test back the 50-day moving average. Now, why is that important? Again, over the 50-day bullish, under the 50-day bearish, right? So any close or any violation on, during at any given time, well, basically on closing basis, below 551, 552 on the close, starts a cycle of 540, let's just call it 543. 543 is the 50-day moving average. Now, before you talk about, wow, it's not going to get down there. Well, it might, right? It might, and that's the whole point. So, you start looking at, continuation from Friday's sell-off, or you could make it even a case continuation from Thursday's sell-off. And I started looking at a whole bunch of charts. I have zero interest on the upside for Monday. Zero. Even if we have a dead cat bounce, is there a couple of names that look interesting? Yeah, MP looks interesting for Monday. So I can't really say I have no interest on anything to the upside. Like MP looks good. Let me see if I have another upside channel. MP looks good. Yeah, MP looks fine. Maybe this ATEC continuation move from Friday, that looks fine. Maybe Meta after, a couple of days worth of, worth of digestion, the earnings maybe spikes back as well. But overall, if we do have an update, I want to short the weak stocks into supply, the stocks that have the catalyst. So for example, if Amazon, gaps up on Friday, on Monday, I am going to be looking at some daily supply of 60-minute supply to reject it. Okay, I'm not saying the stock's going to go down $10 on Monday after the rejection, but at least for a trade. Sometimes the trade could be 50 cents, sometimes the trade could be $5. We don't know, but at least again, I'm prepared. So Amazon, I would like to watch into any type of strength for a rejection. Apple lost its 50-day moving average, guys, on Friday. Okay, same play as Amazon. I will be watching Apple into any strength, and if it gets rejected back, especially back trying to reclaim the 50-day moving average, and it can't, I will be short Apple into strength. Definitely watching that as well. Tesla, right? Watch Tesla every day, but Tesla, okay, same thing. So Tesla is now well below the 50-day moving average. And now on the close, it gave up the 150-day moving average as well. Now, why is that important? Because we have one area left. You see this like fainted, I don't even know what color this is, salmon color line? You see this fainted salmon line? It bounced from here, it bounced from here. It didn't quite get there, right? this will be the last support of Tesla. When I mean the last support, I'm being a little more dramatic, but this is an area here that if Tesla closes under on the daily chart, then we have room all the way down to the June lows of 273. Again, just putting it out there on a technical basis. I don't know if it's going to happen or not, but at least, again, we have to be prepared, right? That's the whole point. We understand our levels. We know our levels. Don't be afraid to ever test the level, both long or short, because, again, you know the dynamics, the importance of that level either being breached or price action continues. So that's always been my message in the webinar. Don't ever be afraid to test a level as long as you know the severity of the ramifications if that level doesn't get or does get violated. So it's very, very important. So I am definitely looking at a lot of names to the downside come Monday, especially into strength. If we get I'm kind of crossing my fingers. I would love to see a gap up open on Monday. I really would. I would love to see a gap up open, especially in these weak names like Amazon and Apple, because if they do get a gap up open and they do get rejected, we have a pretty decent potential second day move to the downside. So that's it, everybody. Hope everybody's having a great summer. Look out for the videos sporadically this week. It's kind of when I feel like it. Okay, I'm really, really just trying to enjoy my summer. If you are interested in my thoughts and you like what I'm saying, or just want to chill, right? Again, all it takes is 30 days. If you think a pivots could be a right fit for you, come aboard, 30 days, kick the tires, pick my brain. And I think you will really like it. Guys, have a great, great weekend. God bless. And I'll check you all on Monday.